What's up, guys? It's Edward Deadly Crypto here with Crypto University, and today we're going to be talking about how to make money during the market slam. Okay, so this isn't going to be too difficult of a video to understand. First of all, let's go ahead and see what is a market slam to you. Now, some of us have been around in crypto for longer than others, and some of us have seen some disgusting market movements. So basically, we can see here from this high to this low is about 25%. Some people might call that a market slam, but the people who backtrack data in cryptocurrency can see that this is a regular occurrence, right? If you're looking at a 25% deviation, that happens quite often in crypto. If you backtrack Bitcoin, you'll see this time and time again, as well as in other cryptocurrencies. So we'll go ahead and measure this fallout here, and we've got minus 18%. Now from here to here, we've got minus 27%, right? So this is a little bit more sketchy than this previous one over here that we had of minus 25%. Now, basically what we have to do whenever we get extended of 30%, right? If we are looking at a 30% fallout in Bitcoin, now it's going to be different in other coins. All coins have a different safe range, right? Or safe deviation range. But whenever we get into this situation, we hit minus 30%. So let's take a look at where that is. The distance that has to change is quite a lot of distance. So from here to here is 30%. So let's take a look at this now. If you can see a 30% fallout on Bitcoin, and like I said, this is going to be different for other assets. All of them are going to have a different deviation range. But when we're talking about Bitcoin, typically if you see a minus 30% deviation, you're heading for minus 50%. So we'll go ahead and backtrack this to the COVID crash. So here's the COVID crash. This is March of 2020. So let's go ahead and measure our price range here. From the top, we have, what do you know, minus 30%, right? That looks awful. So foreshadowing that event, we could see that there's going to be more downtrend. And as you can see, once we hit a minus 30% in Bitcoin, that's usually what happens. Let me see if I can find another one. So looking back in 2017, if we go from the top and we measure down, well, here is minus 30%. And what do you know? Price comes down lower than that. So every time the price of Bitcoin falls greater than 30%, you can expect more deviation. So now let's fast forward back to the recent crash where we just were, right? So now we have minus 30%. So historically, when we're looking at a minus 30% deviation, you can expect a greater fallout. So all you have to do is head on over to your futures market. Now, there's not much difference between futures and spot. The only difference in the example of this video that we're going to be talking about is that on futures, you don't have to hold the coin in order to short the coin. So of course, if you have Bitcoin on spot here and you see a minus 30% deviation, you might want to go ahead and short on spot, meaning sell your coins at this point right here. Selling your coins at this point and hoping to rebuy them at the end of this fallout. So usually if we see a minus 30% deviation, then we can expect a minus 50% deviation. So I'll go ahead and pull this right beside it. And there we go. There's a minus 50%. So this is about a safe trading range where you can expect to rebuy your coins. And sure enough, right here, the price of this candlestick dropped down below 50%, came back up, and you had a couple other opportunities to short along the way within this trading range now. So after you see a 30% deviation, you want to go ahead and take a short position, meaning you sell your coins. If you're on spot, sell your Bitcoin and try to rebuy it back at a lower price. If you're on futures market, it's a lot easier because you actually don't have to hold any Bitcoin. You can go over to your Bitcoin futures contract and put your USDT down on it. So basically you're wagering and betting that the price of BTC is going to go down, and you will be rewarded in that bet in USDT. Now, the key for this is to not be overexposed in your trading bag. A lot of guys want to get into 10, 15 trades at a time, and if you're putting a small amount of money into those trades, it's not always a bad thing. But if you have 10 open trades during a market crash, you're going to get stuck in those trades. You're not going to be able to have funds to help yourself out. So the main things you want to take away from this video is to have a bag of USDT or other stablecoin of your choice. There's USDC, there's BUSD, there's DAI. So there's a couple different stablecoins that you can have in your bag. But the main thing is you want to have about half of your trading bag in stablecoin at all time. That way you can do things like short in a moment's notice, right? This is how you can take advantage of it. You can go ahead and short on the way down. Now, keep in mind, after you get done shorting and you say, hey, you know what? I hit my short goal here. Bitcoin has fallen 30%. I'm going to enter. So I've entered my short, and now we have reached that 50% fallout that we were expecting, right? So close your short. Now you can gamble on the way back up. So not only are you making money on the way down, but after you close your short, passes through here, you close your short. Now in this recovery, in this one candlestick recovery, you can make it all the way back up another 22%, right? And if you hold it all the way into the next candle, that's another 40% for you. So there's ways to make money in a market slam. You just have to be prepared for it. The reason people get hurt in a market slam is because they're overexposed. They have too much money in too many positions, or too much money in one position and no stable coin to help themselves out later. So I hope you're able to take something away from this video and see how you can make money in a market crash. I hope we don't see another market crash like this for a while, but looking back in the history of Bitcoin as we just did, it has happened. It will happen again. Next time you can be better prepared for it. So I hope that was helpful. Good luck in your trades.